I do think gold is a much more. One of the advantages of gold is I think it almost. I'm going to say smooths out the impacts. It's a pretty big market, and so with what's been going on in the Middle East, I think this is an extension of an existing challenge that's been going on there. And so I would have expected a bit more of a move with this, but we are seeing some good strength and again additional stress, geopolitical stress in the world is I hate to say it, bodes well for gold as a comfort metal. I do think that as time goes on, we will see improved ways of owning gold where you don't have to have the physical move. But this whole trend towards deglobalization is going to be it's going to have a big impact and support that. And so,
in a significant shift in the global monetary landscape, gold has overtaken the euro as a preferred reserve asset, marking a historic milestone that reflects growing concerns about traditional fiat currencies. According to Randy Smallwood, CEO of Wheaton Precious Metals and a seasoned geological engineer, this development was both predictable and likely to continue as central banks worldwide reassess their reserve compositions. The European Central Bank's recent findings underscore this transformation, revealing that gold now comprises 20% of total global foreign exchange reserves, surpassing the euro's 16% share for the first time in history. This shift represents more than a statistical curiosity. It signals a fundamental change in how nations view monetary stability and long-term value preservation in an increasingly uncertain global environment. Smallwood attributes gold's appeal to its unique market characteristics, particularly its large and stable trading environment that can effectively absorb global economic shocks. This capacity makes gold an exceptionally reliable store of value during periods of heightened uncertainty, when traditional assets may experience significant volatility. The growing preference for gold is driving a broader movement among countries to re-anchor their currencies to the precious metal, as nations seek enhanced financial stability in an era of mounting fiscal challenges. This trend reflects deeper concerns about the sustainability of existing monetary systems and the long-term viability of fiat currencies that lack tangible backing. Central to Smallwood's bullish outlook on gold is his assessment of underlying US dollar weakness, which he views as a more significant driver than geopolitical events such as regional conflicts. He points to mounting fiscal challenges within the United States, noting that decades of irresponsible government spending have created structural imbalances that make budget reconciliation increasingly difficult, if not impossible. The relationship between gold and the US dollar has historically demonstrated an inverse correlation, rooted in fundamental market principles. When the dollar strengthens, gold typically experiences downward pressure as the opportunity cost of holding non-yielding assets increases. Conversely, dollar weakness tends to boost gold demand as the precious metal becomes more affordable for international buyers and serves as an attractive alternative store of value. Before we dive into the video, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed, only 2.6% have. So hit that subscribe button and turn on the bell icon to stay updated.
Well, there's no doubt. I've long referred to gold as a comfort metal, and in times of stress, that's where people go to is for comfort. And so there has been a strong shift and a strong growth in demand for gold over the last while. We've seen central banks and sovereign wealth funds all build up a larger piece, and as you referenced, now a larger reserve asset than the euro. Not surprised at that, and I do think that eventually it's going to continue growing. And so, I do think gold is a much more. One of the advantages of gold is I think it almost. I'm going to say smooths out the impacts. It's a pretty big market, and so with what's been going on in the Middle East, I think this is an extension of an existing challenge that's been going on there. And so I would have expected a bit more of a move with this, but we are seeing some good strength and again additional stress, geopolitical stress in the world is I hate to say it, bodes well for gold as a comfort metal. One of the most foundational aspects of any type of reserve currency is that it needs to be abject. It needs to be void of political risk. It needs to be apolitical. And the challenges that we've seen with the US dollar, and for that matter, any other fiat currencies, but the US dollar being the main reference currency that we've got, is that they are subject to political influence. And that's one of the reasons we're seeing such a strong shift towards gold, is gold is not a politically influenced commodity. It is widely accepted. It shines through in that kind of an environment, no pun intended. And so that desire to have an apolitical, a non-politically influenced store of value, measure of value, is always going to push support gold in the face of the euro, as you suggested there. But I think it's climbing, as we see, against the US dollar also. And so I just see continued growth for that perspective, especially when it comes to central banks and sovereign wealth funds. That core value, that core reserve, they're very, very risk averse, and they don't want that political risk exposure. So we're going to see continued growth that way. By geopolitical, we've seen Shanghai premiums substantially different than what we've seen in Europe, the LME based, or even in North America. And so we have seen a bit. There's always going to be a change in demand. Now, I do think that as time goes on, we will see improved ways of owning gold where you don't have to have the physical move. But this whole trend towards deglobalization is going to be it's going to have a big impact and support that. And so you will see that on a localized basis. Increases in demand locally will have to be satisfied one way or the other. The one thing that's interesting about the gold space, though, is that we aren't seeing a lot of copper projects. We're not seeing a lot of lead zinc projects in terms of doing, byproduct, non-core byproduct, precious metal streams from base metal projects. We're not seeing investments into the base metal space. What we are seeing, though, is a lot of gold streams on gold mines. And it really does come down to, all of the above in terms of quality of the project, the operating margins of the project, the jurisdiction, the partners, in terms of that. They're all factors that play into what kind of a return we need off of this. But, the biggest issue, the most unique aspect of the gold space right now is that if you look at the gold cost curve and then you look at the spot price, spot price of gold, I don't think I've ever seen such a gap, such a margin. And if you're in the gold mining business and you're not making money in today's world, something is wrong. Everyone should be thoughtful here. It's the cost curve. I've never seen such big disparity between a cost curve, and even the fourth quartile producers are looking pretty attractive in today's world. But wars come and go. The real reason that I'm so bullish on gold long term is the US dollar and the weakness behind it. And when I sit and look at the challenges that we have in countries like the United States, and they're not alone in this, in terms of trying to even just get close to balancing the books. It's beyond that. I was a bit astounded that it took this long for Mr. Musk to realize how governments have been operating for the last 20, 30 years. And it's one of the reasons he's been so negative on this budget bill going forward. Guess what? That's what we're dealing with. That's the framework that we're dealing with. And I just think that to me is the principal reason why I am so bullish on gold, is that it's pretty tough to be bullish on US dollar. I can't find anything that has got long-term sustainable strength. You might get some short-term positives, success, stability, whatever, but the fundamentals behind it there's just nothing that gives you long-term confidence in terms of the US dollar, and that bodes well for gold.
Randy Smallwood has expressed a decidedly bullish stance on silver, pointing to several compelling factors that suggest the precious metal is positioned for continued strong performance through the remainder of 2025. His optimism is grounded in observable market dynamics, particularly the rising demand from exchange-traded funds, which he views as a clear indicator of growing retail investor interest in the white metal. Silver's remarkable performance in 2025 has already validated much of this bullish sentiment, with the metal surging over 20% year-to-date, establishing itself as one of the year's top-performing assets across all investment categories. This impressive gain reflects not only speculative interest, but also fundamental supply and demand imbalances that continue to support higher prices. The role of U.S. investors in driving silver market momentum cannot be understated, according to Smallwood, who emphasizes their crucial influence on global silver pricing and demand patterns. This American investor participation represents a significant component of the broader retail investment trend that is reshaping silver market dynamics and contributing to sustained price pressure. The investment appeal of silver extends beyond short-term market movements, rooted in the metal's extraordinary 4,000-year history as a monetary instrument and store of value. This historical precedent provides institutional investors and large funds with confidence in silver's long-term value preservation capabilities, prompting increased portfolio allocations to the precious metal as a hedge against monetary uncertainty and inflation. Let's get back to the video.
Actually, I like the trend that I've seen in silver right now. We're starting to see the ETFs pick up, and the ETFs have always been a great way of measuring retail demand when it comes to precious metals itself. So we're starting to see the silver ETFs pick up. And that's my argument behind silver is that it needs that retail demand as an affordable precious metal to come into play. The silver markets, the United States, the American precious metals investor has always been an important trigger with respect to the silver space. And again, another clear indication ETF holdings has said that we've seen a pickup in interest in the United States. And so I'm pretty bullish. I think we're on track to, as I don't remember saying that in January, but yeah, we should see it before the end of this year. Well, industrial demand is great if you want materials to move on that, and definitely the growth and to be honest, the shortfall in supply. We just haven't had good production growth in the silver space for quite a while. We hit peak silver production back in 2017, 2018. It's been dropping on a pretty well annual basis ever since then, with a couple of spikes. And so, no doubt, it's one of the reasons I do like silver is you've got that base industrial demand. But really, what's going to move the price is going to be that focus towards the precious metal, the retail investor looking as a store of value. Silver, that's typically what will take it off. It usually lags gold, and gold has definitely had its move. And so, seeing silver start to wake up a little bit over the last couple of weeks, I would say would almost be predicted. We knew it was coming. We just weren't sure of the timing, but we're starting to see that strength come into play now. I just got back from 4 weeks of marketing various different stages all through Europe. And I don't think I've ever heard so much discussion on silver. And usually what I found interesting about that was that Europeans don't usually ask much about silver. To them, it's a bit more of an industrial commodity. But boy, the appetite level from investors and funds, as I said, our company, close to 40% of our revenue comes from silver, and there's definitely an interest level in the commodity itself. So more interest out of Europe than I've seen in a long time. I mean, I don't think we're going to see a bump on the supply side, so it's going to be demand driven. I am a little bit nervous about solar panel demand because that has picked up a lot, but at the same time, or has had some challenges. At the same time, to me, what's going to drive silver is that retail demand. It's got to kickstart. We got to start seeing the retail precious metal space look at the affordable precious metal, which we call silver, and start stepping into that as a store of value. And that's what'll give silver the kick. I do think silver's got some good legs behind it. I just things are starting to shine on the Western front, so to speak, in terms of precious metals investing, and silver always does well in that environment. I think I slightly like silver better, but there's just not a lot of opportunities in the silver space. Yeah. Most silver comes from base metal projects. What I would like to see is some base metal investing, but the price of copper, the price of lead zinc has not been strong enough to justify those capital investments yet. The thing that makes me most nervous about it is I'm not really a big fan on the investment from the government side. I think that if you can find a way to get through the permitting and the regulatory execution and actually deliver, that should be enough to take projects forward and let the markets drive the economics of driving these things. I'm not a big fan of our governments investing into projects to try and move them forward. Just accelerate and try and streamline the whole permitting process. And just give us a framework that we can work with and schedule around and deliver to our investors, on a timely basis. That would be enough from any government is to let the market itself finance these projects on a go-forward basis, and perhaps in support of the infrastructure side for more remote projects. But and especially if there's a broader benefit to those infrastructure investments, but just push it down the permitting and the regulatory side and try and accelerate that. Because when I see projects that have been waiting for permits for 4, 5, 6 years, that all costs investors substantially while you're keeping these projects going. You don't have any cash flow coming back, and so get out of the way.
Gold and silver continue to gain strength amid rising economic uncertainty and shifting global dynamics, with gold offering long-term stability and silver showing strong performance driven by both investment and industrial demand. Both metals remain key assets in navigating financial volatility. Will gold and silver remain safe havens in the face of global instability? Let us know your thoughts in the comments below. If you found this video helpful, don't forget to like, share, and subscribe. Thanks for watching.